This is Trader Travis. No camera today. It's going to make my editing process a lot swifter because I want to get this video out to you. I am back with another video in my new 30-day challenge, and what I am going to do is talk about this crazy market. The market was up 4% today. Really? Come on. Doesn't the market know somebody panic sold last week, took a bona fide loss, and don't appreciate you going up 4%? Seriously. Or on the other hand, didn't somebody buy a bunch of puts on Friday because they thought more panic selling was coming on Monday, and they don't like losing money, a lot of money, because the market went up 4%? Or maybe somebody predicted that the market would keep going down and they don't like being proven wrong. Now, of course, I'm being, sarcastic? I don't know. But this is a reality. And this is why I'm like, forget that game. Yeah, Trader Travis used to be like that, but not anymore. I got tired of the schizophrenic nature of the stock market, and I started learning from buy and hold investors. And so now that's why I bridge the gap between buy and hold investing and trading. And I'm going to talk again about this one stock blueprint here in a second. But before I get to the one stock blueprint, what I want to do here is I have a 5-year weekly chart up. All right, 5-year weekly chart of the stock market. See these yellow highlights? These are market corrections. These are times where, and you can't see it, but I'm putting up air quotes, there's always a reason, right? This current reason, which you shouldn't be watching the news, right? But the current reason is a virus, right? Which some doctors say is just a bad flu. And I'm not trying to minimize the danger here, but when you watch the news, stop allowing them to program the way you think. Because this current circle, right, towards the right, yes, the reason it's down is a virus. Whatever, the reasons don't matter. The market is down. Devise a plan where you make money no matter what the market is doing, okay? Stop listening to their reasons, because guess what? Every other circle had a reason. The last reason was China trade tariffs. And I had people telling me they thought the market was going to crash because of the tariffs, right? The market went down and recovered. Every single time there's a reason. Every single time the news instills fear in you. Stop watching the news. That's why I don't watch the news, because I realize, one, it negatively affects my trading, which means it negatively affects my wallet. No, thank you. I'm on a news diet. If the news actually helped me make money, I'd watch it, right? So you think about it. Think about all the bad decisions you've made and how the news might have affected you. Go back in time and see if you can remember a time that the news actually helped you, or did it make you panic sell only to watch the market recover, scared to get in, only to watch the market go up without you. Every single circle has a reason. Stop trying to time the market. Stop trying to argue with the market. Get in alignment with the market. Set yourself up with a long-term plan where you can win no matter what it does. And before I get to the one stock blueprint, here's real-time portfolio update. Up $4,000 today. And this includes the loss I took on insurance. My insurance had a $3,000 loss. Right, and so if you paid attention to what I've showed you in the last few days of my portfolio, when the market was down, my portfolio was down, right, overall, even with the insurance gains. Now the market is going up, and even with my insurance loss, that portfolio still had an increase of $4,000 in one day. So without the insurance, it probably would have been about a $7,000 increase. So if you can just follow the numbers, what does that tell you? Is my portfolio more bearish inclined, leaning towards a bearish nature, or more bullish inclined, meaning that I'll make more when the market goes up? Well, based on the numbers, I have more bullish trades. And why is that? Here's why. It's the one thing buy and hold investors got right? Look at the blue here. These are all the times the market goes up. The red are all the times the market goes down. Yet people spend 80% of their time worried about these little red air points right here. The market doesn't go down that much. It goes up more than it goes down. Stop spending 80% of your time worried about a crash. Spend 80% of your time figuring out how to make money on these blue areas. You will make a lot of money. Even if you get unfortunate and get caught in one of these red areas, they don't last long. Look at them. On average, they last what? 1-2 years. And on average, maybe they decline 20-30%. I don't know. You can add up all these down times right here, but it's quick and it's over with. If you can just bear down and grit your teeth and deal with it, it will end eventually. Why? If you're an American investor, you are investing in American business. I'm like Buffett, bullish on America on a 10, 20-year time frame. It's a business. A business's job is to turn a profit. Now, I keep saying I'm going to get to the one-stock blueprint and more things pop in my mind. So this is going to be a schizophrenic video all over the place like my brain is. But the last thing I'll show you before I get to the one-stock blueprint is the market was up 4% today. Okay. But if you use Market Club, I want to point out something. If you use Market Club, it did not trigger any green weekly or monthly trade triangles, despite a 4% increase in the market on higher volume. So follow your template. This 4% move could be a fake out. So just follow the templates and just keep an eye on that. I found that interesting, but then again, Market Club trade triangles always, if I followed them, they kept me, from losing a lot of money. So don't get caught up don't get triggered. When I say caught up, it means don't get triggered by a 4% move. Just kind of calmly observe it. Sort of like a Zen trader. Just observe what's going on, but don't get triggered by it. Now, I will end with a very short message about the one-stock blueprint, and I just want to wrap up what I talked about in yesterday's video. Yesterday's video, I talked about all the benefits of why I combine buy and hold with options. And today, I just wanted to show the strategies. Again, 80 to 90% of my money goes towards long-term buy and hold. At my heart, I'm a passive index fund investor, but I don't use index funds. I use ETFs like the SPY because I can trade options around it. There is no wealth without savings. And so what this does is, I believe that you should have a high savings rate. So if, let's say I make $100,000 a year trading profit, my philosophy is I teach my kids 50-50. I save 50%, the other 50% that I can spend, right? So 50% of it should go right back in my account. And that's how I finance some of the growth myself, right? Then these have very long-term strategies. You know why I'm not triggered or worried about the day-to-day or week-to-week movement, or the market fell down, 12, 14% a week? You know why? Because my time frame no longer is like 30 days as a trader. Back earlier in my career when I started as a trader, I get caught in these little down moves and be so frustrated. I get out. That's why I was joking in the beginning, like, do you know somebody panicked? So that was me like 15 years ago, right? Only to watch the market go up without me. And it's because I had to sell. My trades didn't have enough time to recover. They were very short-term trades. But now what I've discovered is I can still be a trader, but I expand my time frame. If I expand my time frame from, let's say, instead of 2 months, maybe 2 years, right? And then I don't worry about what happens on a week-to-week basis. I learned that thinking from Buffett. Why the strategy is called the Buffett strategy, Buffett accelerated rental income. They're all long-term strategies designed to get growth plus income. And of course, which I've been, beating the drum the last few days about portfolio insurance, aka protective put options. That's also a long-term strategy. And then I have down here conservative option trading, where this is more or less where I now take what I've learned over 20 years as a trader and integrate it into my buy and hold strategy. And so we have growth, doing what the option selling gurus say it's impossible to succeed with. And yes, I'm making fun of them because they're clueless, but I buy options. Make a lot of money buying options too, and have been successful at it for the entire 20-year career. So when they say option buying doesn't work, I was like, well, either they're lying or they just won't admit they just don't know how to get it to work, because they can keep their opinion and I'll keep all the money I've made buying options, because I found a way to make buying options work, right? Here's a tip for you. Well, this shouldn't be a tip, because if you bought my book, Option Trading Made Simple, you would know this. Going back here again, if buying options does not work, then buy and hold should not work. Buying options is where you buy something, and if the instrument or the market goes up, you will make money. That's sort of like buy and hold, right? Here's a 5-year chart of the market. The market went up for 5 years. It doesn't always go up for 5 years. Even if we put on a 20-year chart, a monthly chart, we will see sometimes the market goes down. But overall, does it go up? Yeah. So why, if buy and hold works because of this principle of the market going up most of the time, why can't buy and options work, right? Again, Yes, maybe it doesn't work if you're trying to trade 2-week options. No, that doesn't work probably in the long term. But if you expand your time frame as to what options you buy, you should be okay. Now, next thing here is I sell options for cash flow. Well, it's cash flow and growth here. And that's what I said I would talk about, why you could do income and growth, right? So the way I look at it is primarily I trade options or I sell options for income. But as I explained to one of my friends, income is growth, income is profit, profit is income, right? So if I hit my income target, and if I'm targeting 2% a month selling options and I happen to hit 4% a month, I've exceeded my income target for the month. And that can go back into my account for growth. And that's why it's income and growth. So the primary target is to sell options for income, but every now and then we surpass our goals, and then that extra money becomes growth. Buying options for growth, same thing. We buy options to get that accelerated growth, 50, 100% return on our money. But if we exceed our goals, then that extra becomes income, because sometimes we do exceed our goals. So that's how it is. It's a primary purpose for implementing this strategy, and then a secondary purpose. So that's kind of how I look at my portfolio. So that's it. Just wanted to wrap this video up. My videos have been a little bit longer this challenge, which my desire is to keep them shorter so people can get through them each day, bite-sized chunks. So I will see you in tomorrow's video. Take care. Stay encouraged. Stay conservative. Keep a level head. Be that Zen trader. Just observe what the market is doing, but don't be triggered by it. Take care. Talk to you tomorrow. Bye-bye.